All right, let's get right into it. ARM's latest earnings are out, and for any investor watching, the big question was simple. Is the AI hype real? Is it finally showing up in the numbers? Well, this quarter, we got our answer, and it was a loud and clear yes.
You know, the biggest takeaway here is that ARM's whole AI story, it's not a someday thing anymore. It's happening right now. The future is officially here, and you can see it plain as day in their record-breaking numbers. The entire investment thesis, it just got a massive confirmation.
So check this out. They pulled in $1.14 billion in revenue. And get this, that's a 34% jump from last year. Just wow. They absolutely crushed Wall Street's expectations. And this is their third billion-dollar quarter in a row. We're not just talking about growth here, folks. This is acceleration. The train is picking up speed.
And listening to the earnings call, the CEO, Rene Haas, he really laid it all out. He basically said that AI is reshaping everything, and ARM is the only platform that can deliver AI everywhere. He's not positioning them as just another company in the space, no. He's saying they are the foundation for the entire AI world.
So, you gotta ask, where is all this explosive growth coming from? Well, it really boils down to one thing above all else, the AI data center.
It's this just insatiable hunger for AI horsepower in the cloud. I mean, just look at this chart. The money they're making from their Neoverse Data Center platform, it's more than doubled in a single year. That right there, that's the engine room driving this whole success story.
Okay, so this really brings us to our first major point. The AI thesis for ARM isn't a theory anymore. The numbers prove it. And it's all because of one huge bottleneck that everyone's facing.
Rene Haas talked about this on the call. He said something really interesting. He said, power has become the bottleneck for everyone. And he's absolutely right. Every single data center out there is hitting a wall when it comes to power. So in a world where every single watt is precious, ARM's incredible energy efficiency, that's not just a feature, it's their superpower.
And that right there, that explains everything. It's why every single one of the big cloud players, we're talking AWS, Google, Microsoft, even NVIDIA and Meta, are all building their own custom AI chips on ARM's architecture. It's a who's who of tech, and they're all making the same bet. Why? To get the most performance per watt. And the momentum here is just staggering. ARM is actually telling investors that they expect their market share with these top cloud companies to hit nearly 50% just in 2025. I mean, think about that. That's a massive, seismic shift in the data center world, and it's happening as we speak.
All right, so let's pop the hood and see what's really making this growth engine roar. There are two key things we need to talk about, something called compute subsystems and how they're diversifying their royalties. These are the gears that are making this whole machine run faster and faster.
Okay, first up is this really smart strategy they have called compute subsystems, or CSS for short. Think of it like this. Building a super complex AI chip from scratch is incredibly hard, it's slow, and it's super risky. What CSS does is give their partners a high-performance, pre-integrated starting point. It's like getting a professional-grade Lego kit with half the model already built for you.
And here's the kicker, and Rene Haas made this point really clear for investors. CSS is a total win-win. Their customers love it because it helps them get their products out the door way faster. And ARM loves it because they get to charge higher royalty rates. So happy customers and happy shareholders.
And let me tell you, the demand for this is off the charts. They've already signed 19 of these CSS deals. And it's not just in one area, it's across the board. Smartphones, PCs, data centers. It's quickly becoming the go-to option for all their most important partners.
Now, the second part of this growth engine is all about diversification. And this is where the story gets really interesting. Take a look at this chart. This is a snapshot of ARM back in 2016. You can see they were basically a one-trick pony. Almost all their money came from the mobile phone market.
Okay, now fast forward to today. What a difference, right? It's a total transformation. Now, almost half of their royalty income comes from markets outside of mobile. We're talking about huge growth areas like the cloud and the automotive industry. This makes them a much stronger and more resilient company.
Okay, so beyond these amazing results, there's something else bubbling under the surface that has investors really paying attention. I'm calling it the SoftBank X factor, and it's this idea that ARM might be about to make a huge strategic pivot, maybe even get into making chips themselves, and this is all being driven by their relationship with their biggest owner, SoftBank.
So the billion-dollar, or maybe trillion-dollar question on Wall Street is this. Is ARM going to stop just designing the blueprints and actually start building the house? Making their own chips or chiplets. If they do that, it would completely change their business model from the ground up.
And what's so great for us investors is that management isn't being cagey about this. The CFO, Jason Child, basically gave everyone a clear roadmap of what to look for. He laid out 3 very specific things that have to happen before they would ever announce that they're making their own chips. No smoke and mirrors, just clear milestones.
And if you want proof that this is more than just talk, you just have to follow the money. The revenue ARM gets from SoftBank for things like design services shot up by more than $50 million in just 1 quarter. You can see them laying the financial groundwork for this big move right in the financial statements.
So, let's bring it all together. What's the bottom line for you, the investor? What's the big takeaway here?
Well, first, their guidance for next quarter is looking really, really strong. They're predicting revenue will grow around 25% compared to last year. That's way better than what the analysts were expecting, and it tells you that the company is confident this momentum isn't slowing down.
So look, this quarter really cements the bull case for ARM. The story is pretty simple, actually. AI is creating this massive tidal wave of demand for powerful but efficient computing, and ARM is sitting right in the middle of that wave, perfectly positioned to ride it. And now their financial reports are finally showing just how big that wave is. And that leaves us with one last big question that you have to think about as an investor. We're seeing their spending on R&D just skyrocket, and that money is funding this potential move into making their own chips. So you have to ask yourself, is that spending just another line item on the expense sheet? Or is it the down payment on a whole new future for ARM? A future where they're not just licensing blueprints, but they're a dominant force building the chips themselves. That right there is the multi-trillion-dollar bet.